Hey, I'm John Stevenson, the Guaranteed Retirement Guy. Thanks for tuning in today. We're going to be talking about peace of mind in your retirement that comes from lifetime income that is guaranteed. So, contractual lifetime income, that's something a lot of retirees dream of because when they're going to retire, they know they can rely on it. Like with Social Security, if you're relying on that, you know that that's going to be there for you. At least we hope so. And it probably will. I mean, it would be, I would say, some drastic decisions if they were to ever take it away. And it would be a bad mistake if they did, because they'd lose the vote of, in my opinion, the largest voting bloc out there, who are people that have paid into Social Security for many, many years. I don't think that's going away. Pension. If you've got a pension that you are wanting to use for your lifetime income, that is also going to give you peace of mind compared to maybe what a stock market is going to give you. Okay, so there's a lot of things that when we're considering retirement, there's a lot of things to think about when it comes to our income and our peace of mind. There was a study done about 100 years ago about people who had these lifetime income streams that were guaranteed. They actually lived 3 to 5 years longer. So when they were talking about this, they were actually specifically talking about annuity contracts. And if you watched any of my videos, you notice that I talk about annuities. I focus on annuities, and I work with over 70 carriers. I work with hundreds and hundreds of different products, and I focus on providing my clients with the highest lifetime income payout possible, because most people, when they are nearing retirement, they're wanting just that. So if you have Social Security, if you have a pension payout, and you're thinking, it'd be nice to have, another 40 or 50 grand in retirement income, how can I do that without running out? Okay. If you have a 401k or an IRA, or just maybe money in a brokerage account, and you've been used to watching it grow in the stock market, maybe you're thinking, hey, I would like to have some more income. Maybe I've got 50 grand from my pension and my Social Security here, but it would be nice to also have some additional income from maybe an annuity contract. Okay, so I'm going to share my screen. I'm going to show you exactly what's out there, because I want to make sure, especially with rates the way they are, I want to make sure that you see what's available. And if you'd like to, you can go to my website, johnstevenson.com. You can look through the annuity calculators there. The SPIA and DIA, they do pay out lifetime income. The income rider typically will pay out the most if you're looking for annual income, that's the highest, as well as having the flexibility to defer income to whatever date you choose, which is really nice. You can't do that with a SPIA or a DIA. When you buy those annuity contracts, you're going to pick the date right away, and then you really can't change it. There's no cash value. You can't cancel it and take it back. With an income rider, you can cancel it. I mean, if you do, you'll have surrender charges if you do it too early. But most people, when they set these up, they're never going to cancel it. But at the same time, you have the flexibility to activate income whenever you want to, because a lot of these are paying like 8 or 9% every single year for the benefit base. And they give you a whole lot of income if you activate it, in 2 years, 3 years, 4 years, 5 years, or however long you decide to wait. Okay. So I'm going to share my screen. I want you to kind of see what is available for these. Okay, so looking at my screen, you'll notice, and I just threw a fictional person in here. They're 62 years old. They're male, they're single, and they live in California. And I just threw in $300,000. Okay, so maybe they're thinking, I'm going to retire at 67. I'm going to take my Social Security at 67. And I've got $300,000 sitting in this old 401k, or maybe it's a current 401k, or maybe it's an IRA, or maybe it's just cash. But either way, they want to somehow set up some sort of stream of income that is guaranteed and that's contractual. Okay, so how do you do this? Well, let's take a look. We look at all of the options here, and I'm showing everything on my screen. I'm not holding anything back. Okay, now you'll notice on the top here, there are some companies, and you'll see this on my calculator. If you go to the income rider calculator, you'll see some of these higher payouts, like from Annuities especially, or even NASA. But a lot of times what happens is you'll have these inflated payouts that will give you more income up front with the agreement of less income later on. They're kind of for the go-go years. They're accelerated payout options, and they work very well for that. But most people who reach out to me don't want that. They're like, well, That's not something I'd like to do. I'd like to get, something that never goes down. Most of us want that. So, but let me show you what this looks like real quick before I show you the ones that never decrease. Okay. So this one is with Corebridge. And you notice for 300 grand, if you wait 5 years, they're going to give you $39,000 guaranteed. Okay. And they're going to do that. It looks like here around 7-8 years. Okay. Which is not bad. Now, the downside, of course, is at the end of that. It looks like at the end of what? When is it? 6 years, maybe 7 years. Yeah. At the end of 7 years, you are getting 26,000. So they're decreasing it quite a bit. And the 26,000 is your new level payment. And that is what you get for the rest of your life. So these are great for people who maybe have deferred pensions, and those pensions or Social Security is going to kick in at those ages. And they're thinking, I'd like to have more income now, kind of bridge an income gap. So maybe I can stop working now, enjoy that higher income now, knowing that it's going to lower later on. And then I can get, my pension and my other Social Security start, or maybe my spouse's Social Security, and we should be good. That can work. Okay. So if you're looking for a type of contract that will give you that, a lot of these are really good for that. All right. So now let's go back, and I'm going to say, no income reduction. Okay. We don't want anything to go down. And I'm going to just say top annuity per carrier. Okay, so we can just really filter everything out here. Let's see what that looks like. All right, so F&G. F&G is the highest payout that never decreases. Then you got ClearSpring, Delaware, Corebridge, and so on. There's a lot of different companies, a lot of different carriers out there. But let's just focus on the top one. So F&G, $300,000. We're waiting 5 years to take income. Okay, so what they're going to do is they're going to take $300,000. They're going to grow the benefit base by 7.2% every year. And it's going to grow to $424,000 multiplied by 7.94%, giving you $33,722 for the rest of your life. Okay, this is a single payout. If it was joint, it'll be a little bit less. It just depends on what your ages are, how long you defer it. There's a lot of factors that go into play. That's why I always tell people, go to my website, look at the calculators yourself, and then reach out to me. Okay, at least you have your answers instead of going and meeting with someone and they're going to pitch you something and you don't know if it's the right thing for you. It's better just to do your research and see what's there. Okay, so let me just go down here, and I want to verify what I just told you. Okay, it is 7.2%, and it does last for up to 10 years. Okay, so that is really important to know because they're giving you that guaranteed roll-up rate, and they're charging you for it. You can see the rider charges right here. See the rider charges? They're charging you for it. But the charges go away at some point because there is no more account balance to take the money from. Okay, so it only comes from the account balance, not from the income. So this income right here, that's a net benefit to you. All right. So when you see that, I say, all right, well, I'm basically getting 33, almost 34 grand a year. And if I take that out till 95, I'm going to take out almost $1 million. Okay, it's pretty simple. If you live to 110, you continue to pay. You continue to get that income for as long as you live. Okay, so all right, now let's say, well, I want to put in $600,000. Well, what's that going to do? Well, it's going to basically double it. Okay, with annuity contracts, especially income contracts, it is proportionate to what you put in. So see, F&G is still the highest, but now it's $67,000. That's great. So you're thinking, all right, well, that'll be nice. I've got my Social Security paying me 35 grand here, and then I've got this 67,000. I'm at like over 100 grand a year for the rest of my life. That's really nice. Okay, that's almost $2 million in income. So, and I only had to do it with $600,000. So then you can let the rest of your investments sit in the market, and the market goes down for 3 or 4 years. We get a bad recession. You're like, oh, I don't really care. I mean, I do care, but I don't care that much because I got my income over here. I got my annuity paying me. I got my Social Security, which is another annuity that's paying you. And then, just wait for the market to go up. And maybe after 10 years, you might decide to slice off 100 or 200 grand and buy some more income and stack your income. And that's how people fight inflation. They'll let their other assets grow, and then they will peel off whatever interest they want to peel off, and they will use that to buy more contractual guarantees, more contracts of income, and they'll stack their income. And it just continues to give you that peace of mind that you're looking for without having to manage a real estate investment portfolio, or manage, maybe you got preferred stock, you're always looking for the best dividends, okay? Or even a bond portfolio, or laddering bonds, or laddering CDs. I mean, there's all these different things. It gets to a point where maybe it's just the best thing for us, just to give us the peace of mind, give us the enjoyment that we want in retirement, to not have to worry about those things anymore, to really just enjoy having the paychecks come in. You've worked hard for it. It's nice to be able to have it come in and not have to think about it. Then if you want to travel, if you want to go see grandkids, if you want to just do the things that you've always wanted to do, you can do it without having in the back of your mind some hindrance, some weight where you always have to be checking things to make sure that things are in line to where you need to be so that you can continue to have the income that you are hoping that you'll get and that you will never run out of. That is what's so valuable for these annuity contracts. And you'll notice when you look at these annuity contracts, these values, the account value does not last forever. Okay. These are income products. Okay. On this one, from 600 grand, you're going to take income of 67,444 every year, but it's going to run out probably by the time you're in your mid 70s. It is gone. Okay. If you die before then, I mean, you got your death benefit. You see the death benefit right here. Okay. That's going to go to your beneficiaries. So you're not missing out if you die early, they don't get your money. Okay. It goes to your beneficiaries. But what you are doing is you're setting yourself up for a very peaceful and happy retirement where you can enjoy it and be able to have the income that you want. And yes, if you die early, absolutely the money goes back to your estate or to your kids or whoever. Okay. But if you live long into your 90s, your balance is not going to be there, but your income is secure. And that's the whole reason you buy it in the first place. Okay. You buy it for the contractual pension. That's what you want. So anyways, I hope this helps. I enjoy making these videos. And if you've got questions, specific questions, even if you want me to make a video about a certain topic, let me know. Let me know down in the comments below. I'd be happy to help. And if you are looking to purchase an annuity, I would invite you first to go to my website, johnstevenson.com. Check out the annuity calculators that are there. Okay, they will show you everything. It'll show whatever the highest payouts, lowest payouts. It's not going to filter it according to what my commissions are. Okay, that's why I want people to actually look at the annuities that are available before they reach out to an advisor, so that they know that they already know what the highest one is. Okay, now at that point you can just quiz me and see if I'm going to show you the same things, which I will. So for me, it's really about transparency, trust, and it's about showing you the best annuity payout for you. Not necessarily for paying me another 2 or 3% commissions. That's just not the best way to do business, not the best way to run your company. If you want referrals, if you want to make people trust you, you got to show them everything and allow them to choose for themselves. Sometimes the highest payout for you is not the highest payout for me, but it is really in the best interest of the client. And that's really what a certified financial fiduciary, that's what we have to do. So, and I'm happy to do that. I'm happy to show you what's available, and I'd love to help you buy an annuity if that's what you're looking for as well. So no pressure. But again, I really appreciate you watching. I hope you enjoyed the video. I hope it's valuable. If it is, like, subscribe, share, comment below, and we'll see you next time.